I just wanted to give you a quick intro and really say thank you for your time and thank you for being here today. So maybe you could talk just a little bit about, instead of me doing an intro, maybe you can tell us just a little bit about your business. I think it'd be better than me reading it.
Sure.
Awesome. So you're the co-founder and managing director, I first should say. So maybe you can kind of walk us through what Equivesto does.
Sure, yeah. So co-founder and managing director. Equivesto is an equity crowdfunding platform operating here in Canada. So essentially we help businesses, specifically small businesses and startups, raise capital, investment capital from the extended community around the company and the public. So we are licensed as what's called an exempt market dealer. So we essentially allow private companies to issue securities directly to the public, which before equity crowdfunding was illegal.
Okay, amazing. And how'd you come up with the name? Because I find it very clever.
Oh, well, it's essentially just equity and investing with an O at the end. Part of our focus was really about democratizing the investment landscape, specifically to do with startups and small businesses. Often, if you're an entrepreneur and you're looking to raise capital, you're having to go to venture capitalists, angel investors, and there's not that many of them in Canada. Not everyone has that sort of access. Not everyone, is a member of the right club or says the right things. And so just by nature of maybe fumbling that first introduction, you might lose the opportunity to raise capital for your business. So we wanted to create an opportunity for companies to raise capital from their extended community, from the general public, really based on, the strength of their vision and what they're creating, and to give everyone a sort of equitable opportunity to get access to capital.
That's perfect. That's amazing. Well, thank you for being here. Thank you for your time. And I will leave you. I don't want to take any more of your time. But thanks for walking us through. I do suggest maybe if anyone has any questions, you can put them in the session chat throughout the duration of the session. And I'll be back just to say thank you and maybe field any questions that you may have. So I'll leave it to you and I'll be back.
Perfect. Yeah. Thanks, come back. Make sure I end on time. Yeah.
All right. Thanks so much.
Thanks. So today we're talking about what is equity crowdfunding. Everyone talks about crowdfunding, and you've probably heard the term crowdfunding mentioned before, but there's actually 3 different types of crowdfunding. So equity crowdfunding is one of them, but the 2 other types, the types that are more popular and you've probably heard about more frequently, are donation-based crowdfunding, something like a GoFundMe, where people in the US might raise money for medical bills or something, or a reward-based crowdfunding like a Kickstarter, where companies can offer a pre-order of their product or something like that. Equity crowdfunding is a little bit different. With equity crowdfunding, the company is actually offering shares or ownership in the business to the general public. So it's really a situation where companies can finally legally offer convertible notes, so debt or equity ownership in the business in small pieces to the general public, who can participate in much smaller amounts than typical investors. So the same way that you would, spend $200 to pre-order some cool headphones on Kickstarter, now instead you can spend $200 and buy some shares in a company through the same sort of mechanism. What do investors exactly get? So investors get direct partial ownership in the form of shares or potentially debt in the business. So the investors aren't buying into a mutual fund, which then owns the shares or anything like that. The investors are actually purchasing the shares themselves. It's their name on them. Companies can choose the type of shares that they issue as part of their campaign. So they can issue common shares, preferred shares, or even different types of debt like convertible notes. Often we find companies issue non-voting common shares. That just makes it easier managing, several hundred new investors. And often, micro investors putting in $100 or $200 into a company, their ownership percentage would be, 0.001% or something. So they wouldn't have a direct vote themselves. So offering non-voting shares makes it a little bit easier to manage for both parties. So how does it work? Raises are run in a campaign style. So they're up to 90 days in length. All the information for investors is located on the campaign page, just the way it would be for a rewards-based crowdfunding campaign on Kickstarter. Companies set a minimum raise goal and a maximum raise goal. The purpose of this is really to protect investors. So if the minimum raise goal is not reached, the funds are automatically refunded to any of the investors who participated. So if you think about a Kickstarter campaign, there is that main goal that you see there. That is essentially the minimum raise goal with equity crowdfunding. The reason why we do this is typically sort of with traditional investing, as soon as you decide to invest and you sign the paperwork and you move the money is given to the company and it's in no matter what. With this situation, because investors are putting in such small amounts, the goal of the government is to make sure that they feel comfortable putting in $100 or $200, knowing that, you know, the company's just not going to take maybe $500 if that's all that's raised and take the money and go off and end up not being successful. Having the minimum ensures that the company at least gets enough money to make a positive step forward, or the raise is not successful and the funds are refunded. Before the campaign even begins, companies set the valuation and the price with support from the platform that is running the campaign. Companies are vetted with detailed due diligence by the platform before they can raise. Investors also have a 48-hour backout window to change their mind after investing. This is the only type of investing in the world that I know of where you can change your mind up to 48 hours afterwards. Who makes money and how does that work? Platforms make money by charging a brokerage slash success fee. So companies who raise successfully pay a percentage of the total amount raised to the platform. They probably also are charged an application fee upfront. Investors pay no fees to the platform. They only pay directly for their investment. I explained that already. They only pay for their investment, and the companies pay the percent upfront. Often, platforms will charge a combination of cash and stock, but some platforms just charge a cash fee. So where does equity crowdfunding fit in the capital life cycle? So companies are looking to raise money, and that's usually grouped into different stages. What stage does equity crowdfunding fit? So equity crowdfunding fits between the family and friends raise cycle. So, raising $100,000 or less. When you're just getting started, you're sort of in the ideation phase, and you don't have much more than a concept. And it comes around before when you're going out to seek investment from venture capitalists, getting, a Series A, raising, 2 million up, and you've already got revenue and you have strong growth. Equity crowdfunding fits nicely sort of in the middle, right around when you would typically approach angel investors. Part of the reason for this is that equity crowdfunding can be run for companies that are pre-revenue, but have completed their minimum viable product or have a sort of demonstratable product or service. But also equity crowdfunding has maximum raise amounts set by the government. So based on this, you can't in Canada equity crowdfund for 500 million, for example. You're limited by the equity crowdfunding rules. So what exactly are those rules and how does it work? So anytime a company is issuing shares, whether a public company or a private company, it's required to follow the rules set out by the securities regulators in the jurisdiction where it operates. So both public and private companies are regulated. I know I've talked to a lot of entrepreneurs and they didn't realize that, when they go out to raise from angel investors or they ask their uncle to invest in their business, they technically need to be following regulations and rules set out by the Ontario Securities Commission if they're raising in Ontario. But yes, both public and private companies are regulated when it comes to issuing securities. Since equity crowdfunding involves securities of companies, it itself is regulated by securities regulators. So there are very specific rules around what is and isn't equity crowdfunding, how it needs to take place, and who can participate. Each country deals with securities laws differently. So in the United States, there is one commission called the Securities and Exchange Commission for the entire country, which sets the rules that applies to everyone in the US. In Canada, it's a little bit different. Each province has its own securities regulator. So in Ontario, there's the Ontario Securities Commission, BC has the BC Securities Commission, and so forth. What that means is each province has set its own rules around equity crowdfunding and what that means. So even though right now I'm here and I'm talking to you about equity crowdfunding, that doesn't actually refer to one specific set of legal rules. From the perspective of the regulators, there's actually maybe 3 or 4 different groups of rules that allow something that to the public looks like equity crowdfunding. To use these rules, companies cannot raise directly from the public. They can't use the rules on their own. Companies have to work with a registered third party like an exempt market dealer, which is what my company Equivesto is licensed as. This is to protect both companies and investors, to make sure that everyone is taken care of and protected, and there's a party in between the transaction, ensuring that there's no fraud and due diligence is being done properly and everyone's identity can be confirmed and the money can be moved safely. Companies work with the platforms to choose which of those different set of legal rules work best for them. So I mentioned there was 3 or 4 different things that legally might be described as equity crowdfunding. The platform helps the company figure out which set of rules or combination of rules can be used to assist the company in raising capital. The first of these rules were allowed in 2016. So prior to 2016, equity crowdfunding wasn't legal in Canada, and investors could only raise money from high net worth accredited investors. Some provinces also don't even allow equity crowdfunding at all. So Newfoundland, for example, doesn't currently allow equity crowdfunding. What's important to remember as a company considering equity crowdfunding is the rules apply based on where the investor lives, not the company. So for example, if you're an Ontario company that's looking to raise funds via equity crowdfunding, you can only raise from investors in Ontario or following the rules of Ontario if you're raising from Ontario investors, but also following the rules from the BC Securities Commission. So for example, it wouldn't be possible to raise money via equity crowdfunding from both Canadian and American investors at the same time, unless you ran 2 separate campaigns, one on an American platform and one on a Canadian platform. So if you're raising from multiple provinces or multiple jurisdictions, you need to meet the rules and requirements of every single jurisdiction to be able to include investors from there. So how much can be raised? So as I mentioned, there's a few different sets of rules the government has created that allows equity crowdfunding. Essentially, as you increase the amount that you're looking to raise, the amount of paperwork and ongoing reporting required in relation to that raise increases. As a result, the most popular and simplest rule set allows companies to raise up to $250,000 Canadian per campaign, with up to 2 campaigns per year, resulting in $500,000. If you raise $100,000 per campaign, you could do 5 campaigns, but the dollar amount is capped at $500,000 Canadian per year. With this rule set, there's no annual reporting, no financial statements are required, and it has the least amount of legal paperwork involved. If you want to raise up to 1.5 million, there's more paperwork that's required. So you need to have accountant prepared financial statements and provide them on an ongoing basis. If you want to raise over 1.5 million, now you need audited financial statements and much, much more paperwork. So most companies choose the simplest one with the least amount of paperwork. So who can invest? Equity crowdfunding is designed to be open to the general public. So if you're raising and the province allows equity crowdfunding, it's generally going to be anyone 18 years of age or older, and they're living in the same province that you are raising in. So if you want to raise in Nova Scotia, you need to be working with a platform that's also licensed in Nova Scotia, and then you can sort of mix and match that way. As part of this process, platforms must confirm the identity of the investors and confirm their eligibility and their understanding of the risks. So that's, again, where that third party is stepping in to help make sure that the transaction is done in a safe and secure manner. Part of that role is for the platform to make sure the individual understands, the risk of what they're getting into. all investments in small businesses and startups are considered high risk because the company is not publicly available on a stock market. It's not possible to sell the shares to another investor in the short or medium term, and there's a chance that you could lose your entire investment. So in that situation, it's important for the platform to make sure that every investor coming in understands those risks involved, and they're not doing anything that they don't realize. The minimum investment amounts are low, often $500 or even as low as $100. There are maximum investment limits on individuals as well as the maximum raise amounts set by the government. So as a member of the general public, the government limits the most amount that you can invest during an equity crowdfunding campaign at 2,500 Canadian and up to $10,000 per year. And these limits are actually set based on your income and net worth. So the government basically believes that there's high risk involved in these investments. We don't want to see people putting a large percentage of their total net worth or their total investable money set aside into something that is very high risk. And so as the total amount of money you have available to invest goes up, the government is more comfortable allowing you putting larger and larger amounts into higher risk investments. Accredited investors, so high net worth investors with over $1 million in investable assets, can participate with no limits through equity crowdfunding. So essentially, if you want higher limits, you need to prove either a higher income or net worth with specific documentation. Is equity crowdfunding a fit for my business? So companies that work well in equity crowdfunding have a strong community focus, like a restaurant, a shop, or a community center. Or they have an exciting new idea that captures the imagination, like a company that has new technology that's reducing pollution. They also have a strong positive impact either locally or globally. It's easy to market and talk to people about that company and brand's vision, and it's easy to get people on board with what they're trying to do. Companies that don't work as well are companies where the value of the business is tied to a small number of employees. For example, a consulting firm or freelance businesses. Highly technical business-to-business companies can also be a challenge depending on the industry, as you're turning to the general public to seek investment. But if they're not able to understand what your business does, they're less likely to invest in your company. So how do I have a successful equity crowdfunding raise? It's critical to have a strong marketing plan and build a community before you've even started your campaign. Platforms are legal doorways to allow campaigns like this to go out to the general public, but don't assume that existing investors on the platform, no matter how many they have, will decide to invest in your company. Only around 5% of existing investors on any one given platform will choose to invest in your campaign. So companies, to plan for success, should aim to attract 100% of the investment that they need to raise from their own community or efforts. If your community isn't big right now, that's fine. It's just about taking and spending the time before launching your campaign to build and prepare that community. You want to treat your campaign like a product launch. So you want to build interest and excitement prior to even launching the campaign so that your campaign has a really great start. Have a detailed marketing plan that includes email campaigns, social media posts, events, and advertisements. A lot of companies looking to do equity crowdfunding consider working with a marketing firm that specializes in equity crowdfunding campaigns to help them prepare properly and make sure that the campaign is successful in the long term. If you're interested in learning more, you can head to equivesto.com/learn. We have an entire learning center for both companies and investors looking to get involved. You can also visit the Ontario government's website, getsmarteraboutmoney.ca, and they have lots of different pages with information on all kinds of investing, not just equity crowdfunding. If you have any questions, I would be happy to cover them. Let's see if there's anything in the chat. No questions. Okay, good. I guess that answered everything that you wanted to know. But if there's anything else, I'm here if you have questions.
Hi, Alexander. Thanks so much for your presentation. That was great. I I thoroughly learned a lot from that. So you were very well thought out. So that was great. So if people want to get in contact with you, can you maybe put your, I know it's on the screen, but maybe put your contact information or your website in the chat just so people can easily click on it in contact?
Yes, I can.
So how long have you been, when did you start in Equivesto?
So getting licensed as an exempt market dealer to be able to do this does take some time. So myself and my co-founder, we started working on Equivesto in 2017, but we actually finally got our license to operate in May of 2020. So we launched our first campaigns in September. Yeah, it's nice to finally be here. Thank you.
And you also are an entrepreneur, so took the leap of entrepreneurship. It's not an easy thing to do. So
yes, but it's, as I'm sure everyone can attest, it's only fun and no hard work, right?
That's right. Not hard work at all.
No.
Well, thank you very much for being here. We really appreciate your time. We do have a question, actually. So crowdfunding costs of debt right now.
That's a great question. It's not the same as going out to raise from another platform or going to the bank where you can say, okay, this is the fixed interest rate that I can expect, just like if you're doing an average weighted cost of capital or for debt or for equity. With crowdfunding, it's quite variable. It's honestly how engaged and how excited is your community? How much do they want to participate? It's best to assume that you're going to need to have an interest rate higher than what they might be getting from a less risky asset. So usually companies are aiming for around 10%, but it really does come down to what specific platform you want to work with. Equivesto is focused on the equity offering. The debt piece is typically done by a peer-to-peer lending platform. So one of those would be, I'll put it in the chat, Lending Loop. So they would be who I would recommend looking at if you wanted to do a pure debt-focused campaign. And I think they would have more information around the cost of borrowing.
Amazing.
Hopefully that answered your question, Ted.
Yeah, no, that was a great question. So people can reach out to you directly. LinkedIn is probably the best way, or your website.
Yeah, LinkedIn is great. The website is good. There's lots of information on the website. So, I just sort of scratched the surface here, but we have detailed articles and videos and FAQs and everything on everything you could want to know. So that's all there in the Learning Center.
Amazing. Well, thank you so much for your time again. We're doing a networking session now. So on the left-hand side, you'll see networking. So if you go there, oh, we have another question. I'm just going to finish my networking thing, and then I'll leave you to answer the question that's in there.
Sure.
So right now we have until about 3:25 to go in the networking area. Again, if you share your audio video, you'll be connected with others that are on the platform. So great way to, try to bring some liveness to our virtual world. So you do have a question. So I'll leave you with the question. But again, 3:25, we have our panel with 5 CEOs from the Toronto area who are going to talk about their business. But again, just want to thank you for your time, Alexander. Really appreciate it. And someone's asking, sorry if I missed it, but at what stage does a company need to be in to be able to raise capital?
Yeah, so I've just hopped back to my capital lifecycle slide. So the sort of minimum requirements for equity crowdfunding are typically that you have a completed minimum viable product, or you have some demonstrable traction or sales. So you can be pre-revenue, but if you are pre-revenue, you need to have a sort of finished product or service that's basically ready to go to market. Or of course, you can be pre-revenue. The lowest amount that you can raise through equity crowdfunding on Equivesto's platform is $25,000. So in terms of the smallest you can be, I think that sort of explains that. And of course, you'd need to be a Canadian company and incorporated. But those are the main minimum requirements. You can visit equivesto.com/companies to learn more about what those requirements are. We also have free legal and document templates for all the documents you would need to submit if you're interested in applying.
Perfect. All right. Well, thank you so much. And hopefully we'll see everyone in the networking area. So thanks again. Have a good afternoon. Thanks.
Thank you.